Because to give you an example, when we bought the property, the bank at that time valued it at 5.7. We've put it now on the market for 6.5. We're negotiable. We'll speak about the price. But at that time, without the borehole, the bank valued it at 5.7. And bank valuations tend to be very conservative. Right? So now we want to sell it because we want to go do another deal. Now, where the benefit is, you don't actually need to go to the bank to buy this building if you're interested. You can basically, we can become your bank. We'll become.
That's what I was trying to explain to
Yeah.
you. You got the bank story, which is the normal, you borrow money in the bank, you get the bond, but this is different. This is more on an installment sale kind of arrangement, where you put money down and then they act as the bank.
So we act as the bank, and the reason we're doing that is he deals with a lot of foreigners. And with a lot of foreigners, they are not able to get bonds from the bank.
Yeah, they don't get approved.
They don't get approved, you understand? So he's been doing it for many years. And now he's asked me to sort of help him formalize the whole structure. And now we're doing it with this deal where we're saying, okay, we want to make it easier for other people to get into commercial property.
Yeah.
So but we can't do this with buildings we don't own. We only do it with buildings that we own.
That you know you've got right.
Yeah, because remember, if I don't own a building but I try and give you finance, then I'm becoming a finance provider and then I need to be registered as a finance provider, you understand? But because it's my own building, I can structure the deal however I want. You understand? So how it typically works is when you go and buy a building like that, normally the bank is going to ask you anywhere between a 40% to a 50% deposit. Right? So let's just use 6 million as a round number. If you're buying for 6, you either need, I don't know, anywhere maybe 2.5 to 3 million rand you need to put down as a deposit. And then the balance the bank will give you. We are saying we'll make it easier for you. Right? Let me just add also, when you do it with the bank, they're going to charge you a valuation fee. And they're going to charge you what we call a raising fee, which is normally about 1.25 to 1.5% of the loan amount. You're not paying those fees with us. Right? So you're saving there. And then on top of that, you're not really paying transfer fees at the moment. So what we say is you give us anywhere between 20 to 25% you put down as your deposit. We then, between 1 year to 2 years, will give you sort of the long term. That will be our long term. But you don't pay us capital either. With the bank, you're going to pay them capital plus interest. With us, you're going to pay us interest only. Now, the rate will be higher, obviously, because we're doing a structured deal. We charge prime plus 3. But when you look at the cash flow, and I'll show you now that in this deal, if we're able to do it, you'll be making money. I calculated you'll probably make between 12 to 15,000 a month,
Every month. Yeah.
which you're not making right now.
Yeah, which means if you're saying 12, 15,000, which means I'll be able to make that come to me and also pay you.
Yes, so we're going to talk about the numbers now, right?
That is after I've paid you.
Yes. So after you've paid everything, because remember, and I'll explain to you, so we sign what we call a triple net deal, which means we give you complete control of the building.
Yeah.
You're going to collect the rental, right? The only thing we're not doing is we're not giving you the title deed because you haven't paid us for the property, right? So we're going to get into that. I'm just giving you the broad structure. So you'll pay us interest whether it's 12 months or 24 months. After 24 months, now we've given you time, like you're a businessman. You already have a business, hopefully it's making you money, and I heard you had some other business interests. So you've got 2 years, 12 months to 2 years to save up additional capital, right? Or come up with the balance of the money and just say, right, here's the balance of the money. Or you just add in another million, 1.5 million, and then you go to a normal bank and you just say, I want to refinance now. Because now you have the money. But you've already been controlling the building for the last couple of years. So we do expect you to pay everything. So that building at the moment, it makes about gross, I must just check the numbers, about 87,000 a month.
Well,
That's gross. I'll talk,
67,
That's
plus
net.
the water, it's about 76.
yeah, but I'm talking gross. So all the money that we collect from the tenants, plus all the recoveries that's been paid, because remember, you know, the tenants are paying for other stuff there as well, right? So that adds up to about, let's say, 80, I think a low 80, 82, 83,000. After all expenses are paid, we net about 67,000.
Excluding the water, you've got to add the water.
Yeah, that's excluding the water
You
amount.
net 67, you've got to add another 11,000. You get 76.
So yes, so that's what I was
Yes.
doing, right? So basically we're making 76,000 if you include that. So without the water, without the borehole, it's about 67. Add in that 10 or 11,000, you're looking at about 75, 76, somewhere around there, right? So now you've got 76,000. So depending on the number that we agree on, and depending on the deposit that you put down, like I'll tell you what I worked out. If we our price that we agreed with another buyer, but he couldn't come to the party, he didn't have the money. We agreed on 5.8 million, right? I could have said 6 million. I'm telling you 5.8. I'm telling you that's the price, right? 5.8. You would put down, let's say 25%, which is about 1.5 million. You would be paying us about 52,000 a month on interest. But you're making how much? 76. So that balances your profit.